Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, October the 20th, 2025. It is noon my time, almost exactly right now. Almost. It's about a minute away from noon my time. I'm doing this podcast a little bit earlier than normal because I'm about 30 minutes or so from jumping on an airplane and heading out of town. I'm going to be gone all week. I'm going to be doing everything normal all week. I'm just going to be out in San Francisco visiting my daughter and my son-in-law and my newest grandson. But all my schedule should be pretty normal. At the time I'm doing this, you can see the Dow Jones is having a great day, the S&P having a great day, the NASDAQ having a really good day. Hopefully, for the remaining 2 hours that the market is open, this will last. It's with 2 hours left to trade, anything could happen. This is going to be a really short podcast. I did not want to let the day go by without getting some commentary online. And mainly what I wanted to talk about was the new spread trade we did on Amazon. I'm loading it up right here as we speak. We did an in-the-money bull call, and I want to make sure that everybody is kind of on the right page with why I did this trade and what to expect from this trade. So an in-the-money bull call, just really quickly, for those of you that might be a little bit newer to what we're doing, an in-the-money bull call means that we do a bull call spread, which is a long call and a short call, same expiration date, short call at a higher strike price than the long call. An in-the-money bull call means that we start this short call already below where the stock is trading, meaning it's in the money, meaning both options are in the money. In this case, we did 210, 207.50, and we tried to get in for $2.05 or less. I think I filled for 203, and I've already heard from some other people that they've already filled on the trade. So the idea behind this trade is, unlike a traditional bull call where you typically set the long call and the short call out of the money, you're expecting a bullish run and you're expecting both options to go up in value, but the long option is going to go up in value faster than the short option because it's closer to the money. That's the way a traditional bull call works. And in the money bull call is a little bit different because all we need to do is have the stock price between now and the expiration, which is just this coming Friday on the 24th. We just need the stock price to stay at or above 210. And what will happen is the difference between the two option prices will get closer and closer to the difference in the spread as we get closer to the expiration. So we've got a $2.50 spread when we're talking about 210 and 207.50. We paid 205. So what will happen as we get closer and closer to Friday and the stock stays above $210 a share, this 205 that we paid will get closer and closer to 250, which is the spread. When it hits 246, we're going to get out of the trade. Now, I don't expect it to do that before Thursday and Friday unless Amazon really skyrockets up in the next couple of days. The one thing I want you to know more than anything else about this trade is this is a slightly higher risk trade because right now, Amazon is in a bearish trend. And you don't normally do a trade that needs a flat to bullish move when you're in a bearish trend. The reason I'm making the exception on this one is because I believe this is a very strong level of support right here. It acted as resistance back here. It was tested as support here. It was tested as support here. It's being tested right now as support. Amazon is a week and a half from reporting their earnings. I believe they're going to consolidate somewhere between 215 and 220 as they lead up to their earnings. That is typically what Amazon does. Not always, but typically they consolidate just a little bit higher in the week to week and a half moving into their earnings. So, and here's a perfect example. If we had done this trade on the previous earnings, we would have placed the trade right about there. Amazon consolidated a little bit going into earnings for a week and a half, then it had its big drop. We've got a trade expiring 4 days before they report their earnings. So we're looking for that flattening or that consolidation. Did the same thing here. If it had been back here, this is when we would have placed the trade. This was the earnings report that skyrocketed them up, but still they had one bad day in there, but they kind of consolidated at or a little bit above where they were trading. I expect the same thing to happen here. I expect that consolidation to be at or a little bit above where they're trading right now. As of today, at this time right now, they're up $2.80 a share. I think for the rest of this week, you're going to see an average of 60 to 70 cents to the upside, and they're going to finish around 220 at the end of this week. And if by Thursday or Friday we can get out of our trade for that target profit, that's what we're going to do. So that's the trade that I wanted to comment on. The only other thing I wanted to comment on, Apple is having a phenomenal move to the upside today. The trade is up. My trade is up 8.7%. This is our Apple spread trade that we did last week. I know our target profit was a little bit higher than this, but if we hit 10% this week, I'm going to take the money and get out of this trade. What I don't want to have happen is I don't want Apple to get to their earnings report, which is still a little over a week away, week and a half, actually almost 2 weeks away. I don't want Apple to get to their earnings report and be trading up in this range and have both of our call options completely in the money, both of our put options completely out of the money, and then Apple misses on earnings and they fall, but they end up between the two long option strikes. That's the no man's land that you do not want the trade to finish in or get anywhere close to. So if we hit 10% profit in Apple before the end of this week, I'm going to take it and get out of the trade. Triple Play, we sent out a new trade for AMD, for CoreWeave, for IBM, and for Tesla today. Unfortunately, AMD didn't get in right at the open, and we kind of missed the boat. They're way up today, but we didn't get to take advantage of that. So we did not get filled on this trade. We did not get filled on Tesla. We got into IBM. We got into CoreWeave. CoreWeave is an in-the-money bull call, just like the Apple trade, or not the Apple trade, sorry, the Amazon trade we just went over. IBM, a long iron condor. I will probably send out some more trades for the Triple Play side this week. Nothing more today, but probably send some more this week. So I know this is really short. I don't have a lot of time, unfortunately. I just wanted to make sure I told you about the new trade, what we're doing. Our NVIDIA trade looking good right now. Our Palantir trade looking phenomenal right now. Overall on our spread trades, our profit is ridiculous. We're almost at 400%. On our Triple Play trades, we're not quite as good because of that one little rough stretch that we had, but we did close JP Morgan, Johnson & Johnson with full profit. Strategy and Corp looking way better today than they were previously. And Texas Instrument, TXN, and Taiwan Semi, I think they're both going to get profitable before the week is over. So we'll keep a close eye on those, and I'll comment on those a little bit more tomorrow. All right. Hope you're having a great Monday, everybody. Thank you, and I will be back tomorrow, probably closer to the close of the market, to do a podcast. Thanks. Bye-bye.